So, welcome to the third lesson in the basics of forex fundamental. And in this lesson, we'll be looking at the big players in fundamental slash macro. It's ACFX Academy, and I'll be your tutor, your guide, and your host. And in this lesson, we'll be looking at big players in fundamental analysis and macroeconomics. The previous lesson, we learned what fundamental analysis is all about and what macroeconomics is. And we saw some terms and terminology which made us understand exactly what we are doing in fundamental analysis. If you missed that, I suggest you should go straight to it and watch it before coming over to this. So let's go into it. Big players in fundamental slash macro and their rules. So in the world of forex trading, price don't just move randomly. I've said this. Behind every major shift in currency value are powerful institutional players and macroeconomic forces that shapes the global economy. Understanding who these big players are and how they influence the market is the key to mastering fundamental analysis. So now we understand that fundamental analysis also drive the forex market, and some of these fundamental analysis are looking at the data of the economy, the health of the economy. And if you understand the health of the economy, you understand the value of the currency. Now, who are these people that are making these decisions that are affecting the value of a currency? And that is what we are going to be looking at. I need you to take your pen and paper and be jotting down the important things in this lesson. We'll be looking at the big players, people who make decisions that affect your trade. Those trades that all of a sudden you see a huge spike. It's just one announcement that was made by a big player. You understand? And in this lesson, we're going straight into it and getting to understand it better. So, most times the big players announce the move which would definitely shake the forex market even before it happens. And now, sometimes once you know this announcement, you already know the result of this announcement. You can trade in the direction of the market. Most times I can tell you that I trade in the direction of CPI before even the CPI is being released, before the NFP is being released. I will show you some of my trades as we move on with the lesson. You understand? So these big players make this announcement, and those who are able to understand the fundamental have more advantage in the chart and will be able to make profits using this announcement. Most people that don't understand fundamental run away from fundamentals. But what if you understand fundamental analysis, you will be happy that the news is being released, because most times fundamental analysis give volatility to the market. Let's be honest. Without news, without fundamental volatility, there will be no volatility in the market you're trading. If there's no news, most times you see the market just moving in very, very low and weird volatility. But if there's a news release, you see a huge spike, a huge volatility. Most times, my fundamental analysis, the trade hit TP within minutes. It doesn't even take time. But if there's no news, you can hold a trade for like 2 days and the trade will still be moving very sluggishly. You understand? So let's look at some of these big players. Number one is the central bank. Now, I'll be mentioning the big players according to how strong they are. And the first one is the strongest, the central bank. Now, the central bank is a core mover of the market. This is one of the biggest players in the market. The central bank are the most influential institution in forex trading. They control the country's monetary policy. I talked about this in the previous lesson, and this directly affects interest rates, inflation, and currency value. I explained how the interest rate affects inflation and how it will now affect the currency value. If there is high interest rate, people wouldn't borrow much from the banks, and if people are not borrowing too much from the bank, it reduces the spending power. If people are not buying much, the producers will be forced to reduce the price of goods and services. And this in return would increase the value of the currency. Why? Because they will reduce the inflation. They will reduce the inflation. So higher interest rate is good for the currency value. Lower inflation is good for the currency value. And who makes this decision that makes, causes an increase in inflation or decrease in inflation? Well, it's the central bank. Is the monetary policies. You understand? The central banks are the big players. They can influence the overall health of an economy. So the major central bank is the Federal Reserve, which is the Fed. This is for the United States. We have the European Central Bank, ECB, which is for the Eurozone. We have the Bank of England, BOE, which is for the United Kingdom. We have Bank of Japan, which is BOJ, which is for the Japan, and this is for the JPY pair. We also have the Swiss National Bank, SNB, which is for the Switzerland, and we have Reserve Bank of Australia, which is for the Australia, which is for AUD. You understand? All these All these countries, all this economy, they have a particular pair. And if you understand their pair, you understand the health of the economy as well. You can use that to understand the value of the particular currency. You understand? So the key rules of central bank is to set interest rates. They can hike, hike an interest rate. Hike means increase. You understand? If hiking of the interest rate is done, it will strengthen the currency. So cutting of the interest rate, it will weaken the currency. Do you understand? So they use tools like quantitative easing. I will explain what quantitative easing or tightening is in the intermediate lesson. Also, they release monetary policy statements and forecasts that moves the market. You understand? They also respond to inflation, unemployment, and economic growth. So you can see that the central bank has a lot of roles to play in fundamental analysis. They can determine the strength of a currency. You understand? They can determine the strength of a currency. So if a currency is weak, central bank can just make a decision that all of a sudden will change the direction of that currency and make it strong. That's why you might see USD will be an uptrend. All of a sudden USD is the downtrend. You understand? If you're looking at Euro USD, all of a sudden it have changed direction. This is because the central banks, the big players, have already made a decision which changed the direction of the market. The forex market always have a story to tell. If you're looking at it based on just technical analysis, you're missing out on a lot. Do you understand? So let's keep going. Another big player is the government and policymaker. Now, as of the time I was making this video, that was when Trump was on seat. Now, Trump showed us that he can move the market. A lot of traders that didn't understand fundamental were complaining during this period. Trump have entered seat, he's making the market. But actually, I won't lie, I and my students were making profit during this season. During that January 2025, February, March, during that period, we were making a lot of money from the forex market. Why? Because we understood what the fundamental was doing. We understood what Trump was doing, and we were making good money from JPY pairs, from USD pairs. I'm not even lying. If you're a student of mine, you can testify to this. Understand? So the government plays a huge role in the fundamental world. You understand? They are one of the big players, but the central bank is bigger than the government. I won't lie. Central bank can make decisions that will change the direction of the market entirely. Government can make announcements which gradually would affect the value of a currency. So now the decision they make is known as the fiscal policy. For the bank, is known as monetary policy. For the government, is known as fiscal policy. Now, fiscal policy can be tax, spending, and the rest. So you can see trade policy like tariff. Trump announced a release on tariff, and this affected the currencies. This made us to go into a risk-off environment. Sorry, you get to understand that, like I said, in intermediate. So they can also cause trade war, which Trump did this year too as well. An economic geopolitical decision can affect the currency as well. Geopolitical decisions are just political events that affect a particular currency, like the wars, election, regulation. You understand? All these things can affect the value of the currency. So all these things can be done by the government. This is one of the big players. So they can affect the value of the currency and make the currency weakened. You understand? This is why you can see your trade just change direction. It's because the government just made an announcement that weakened the value of that particular currency you're trading. So an example is a government passing a major stimulus package can boost economic activity and influence currency strength. So let's keep going. We have the institutional investors and hedge fund. So now I want you to understand that when we are talking about investors, this is the people we are talking about. When we say investors are buying a particular currency, these are the people we are talking about. You understand? People who pump a lot of money into the market are known as the investors, the hedge funds. You understand? And whenever they focus on a particular position, let's say they buy Euro USD. If they are buying Euro USD, the direction of Euro USD will change to bullish, even if Euro USD was bearish. Why? Because they pump a lot of money into that particular currency pair. So that is why I usually tell my students, you want to be trading in the direction of the investors. And what do the investors use to trade? They don't use technicals. They use fundamentals. If central bank are, increasing the strength of the currency, they know what to be doing. They are going to be buying that currency ASAP. You understand? If the interest rate of a particular currency is rising, they are buying that currency. They are not looking at other block, FVG, all those things that other traders look at. They don't look at all those things because they have money. They will just buy it at any position, and you see that currency will just start doing well. So you want to be trading in the position, in the direction of investors. That is just simply what the institutional investors and hedge funds are. So no need to really explain this. I hope you understood it. Take note of the one I just explained. Let's go into more of this. We have the international organization. Now, the international organization are just people like the World Bank, the World Trade Organization, and the International Monetary Fund. These people don't really have much strength like the central bank or the government or the investors, right? These people just, forecast the news. They can tell you their decision on the news. For example, if you're looking at the news, you will see people's forecast. Now, a lot of people can just come and forecast and say, US, they look like something that would sell. You understand? US, they will look like something that will sell. This is a forecast. And most times, this forecast will play out the way it's been, announced, because these people also have power. They're also a big player, but they're not really that big. You understand? They can just tell you, okay, this is their decision on, GDP growth. This is the decision on this particularly, and they make those decisions based on the health of an economy. This is why you have to understand fundamental. If you understand fundamental, you already know the decision they are going to be making. Do you understand? And if you're making the same decision with them, like chances you're going to be in profit. So the international organizations are just people that forecast a price movement. They forecast the health of an economy. They forecast the value of the currency. They're not really that big. They cannot really affect it, but they can tell you where a currency will be going. And if you can read fundamental analysis, you can really understand their forecast and you can trade in their direction. Most times I just read the forecast of the international organization and I know the direction in which I'll be buying or selling a particular currency. That's how easy fundamental is. Do you understand? That's how easy fundamental analysis is. So the fifth one is the rating agency. Now the rating agency are people who, they're not really that valuable. I'm not really call these people big players because I don't think they really have much effect in the market, but at least they stand the ground. You understand? They can tell you if an economic currency is credit worthy. You understand? They can maybe increase the how will I put this? They can tell you if the currency is downgraded or if it's in an upgrade. You understand? So if they say an economy is being downgraded, it means that the currency is weakened, and most people wouldn't want to buy that currency. Most times the investors look at the decision of the rating agency. Now, once investors look at the decision of the rating agency and the rating agency says that this currency doesn't have much value, it decreases the investors' confidence. You understand? And most times this will lead to the fall in value of the currency. So that is just simply what rating agency does. They rate, just from the name rating, they rate your economy and they rate the currency value. So the commercial bank and corporations. Now the commercial banks are also big players, but I'll not really say they are really as big as the central bank or government, investors or the rest. You understand? They're just another big players that provide liquidity in trading. Now these are people that pump money into the market as well. They are close to the investors, but the investors has higher power. The commercial bank are also traders like us, but they are not retail traders. You understand? They are big traders. When I mean big traders, they pump in a lot of money into the forex market. Most of the money you're making from forex is coming from the commercial banks. Most of the money, your $100 profit, your $200 profit is coming from the commercial bank money, and most of the money you're losing in forex is going to their account. You understand? So these are also another big players that pump money into the market. No need to really explain them. You understand? So sometimes they pump money to just make an economy to go well. If an economy is losing value, they can just pump money into the economy, and all of a sudden you see the economy will start doing well. So these are also big players as well. Take note of the one I explained. I just simplified it for you. So that is simply it. And the key takeaway for this video is, in forex, you are not just trading against other retail traders. Now, if you're SMC trader or smart money concept or ICT, they usually tell you you're focusing on taking out retail trader SL. Well, trust me, you are not just trading against retail traders. You are also in the same arena with central bank, hedge fund, government. And if you're understanding how these big players act and think, you position yourself to trade with the market movers. You don't trade against the central bank. Unlike you trading against retail traders, you don't trade against central bank. Like, if you're trading against them, you're making a drastic mistake. You have to be trading in direction of central bank, government, and all these people. And if you want to trade in the same direction with them, you have to understand fundamental analysis. They don't look at technicals. They don't look at flag pattern. They don't look at other block. They don't look at all those things. All they just do is look at fundamental analysis and decide where the market will go. And if you want to trade in the same position with them, you have to understand fundamental analysis. That is just simply it. And that is the ending of this class. I hope you understood everything. In case you have any question, make sure to ask me my DM. You can see my WhatsApp contact below. And for now, have a lovely day ahead.